Welcome to Walker's Market Weekly. I'm RK Walker here at the New York Stock Exchange, bringing you a review of this week's stock market. On Sunday, the Federal Reserve met again in its second emergency meeting and cut interest rates by 100 basis points to essentially zero. The Fed also indicated it would start buying treasuries and mortgage-backed securities of at least $700 billion. On Monday, the Empire State Manufacturing Survey for March plunged from 12.9 to minus 21.5, and markets proceeded to plunge 7% at the open, triggering a circuit breaker within a couple minutes. Markets recovered slightly after trading resumed, but then continued declining at the end of the session after President Trump said the virus may not be contained until August. The Dow Industrials ended the day down 2,997 points, or 12.9%, its steepest one-day decline since Black Monday in October of 1987. 10-year Treasuries yield declined 22 basis points to 0.73%. West Texas Intermediate crude fell 9.2% to $29.05 a barrel, and gold fell 4.3% to $1,463 an ounce. The volatility indicator known as the VIX surged almost 43% to close at a record high of 82.69. On Tuesday, retail sales for February declined 0.5%, and industrial production for February rose 0.6%, while the housing market index for March declined 2 points to 72. The JOLTS job openings report for January showed openings declined 6.2% to 6.963 million. The Federal Reserve said that it would create a special credit facility to fund short-term commercial debt for companies that are having trouble receiving money on the open market. The Trump administration is considering a fiscal stimulus package estimated at $1 trillion, with about $250 billion in checks written directly to Americans. Trading was volatile. However, the Dow Industrials closed up 1,048 points, or 5.2%. The yield on 10-year Treasuries rose 28 basis points to 1%, and West Texas Intermediate crude fell 6.4% to $26.87 a barrel, the lowest on record. On Wednesday, housing starts for February fell 1.5% to an annualized 1.599 million units, and the EIA petroleum status report for the week ending March 13th saw crude oil inventory rise 2 million barrels. Markets fell sharply again, with the Dow Industrials dropping 1,338 points, or 6.3%, and 10-year Treasuries rose 22 basis points to 1.18%. The New York Stock Exchange announced that it will temporarily close its trading floor and move to electronic trading after 2 traders tested positive for the coronavirus. Billionaire investor Bill Ackman gave an impassioned plea on CNBC for President Trump to shut down the country and to go on holiday for 30 days to contain the coronavirus. Ackman repeatedly stressed that the country can't tolerate a prolonged shutdown without destroying entire industries, and that hell is coming if drastic action wasn't taken now. The White House responded to Ackman's comments by saying, quote, "As President Trump has said, we are going to ensure that we take care of all Americans, including affected industries and small businesses, and that we emerge from this challenge stronger and with a prosperous and growing economy." On Wednesday evening, the European Central Bank announced a €750 billion pandemic emergency purchase program that will purchase private and public sector securities, commercial paper, and ease collateral standards through at least the end of 2020. On Thursday, jobless claims for the week ending March 14th surged 70,000 to 281,000 as mass layoffs picked up due to the coronavirus's stranglehold on the economy. The Philadelphia Fed Business Outlook survey for March plummeted to minus 12.7. President Trump signed a bill that expands paid leave for workers during the crisis. The Dow Industrials ended the day up 188 points. However, the NASDAQ Composite surged 2.3% as tech shares like Netflix, Amazon, and Facebook had strong gains. West Texas Intermediate crude rose 25% to $25.43 a barrel, and 10-year Treasuries ended the day yielding 1.16%. The U.S. dollar continued to rally, jumping to its highest level since January of 2017. On Friday morning, existing home sales for February increased 6.5% to an annualized 5.77 million units. Markets rallied strongly at the open on what many analysts were calling a technical rebound against the backdrop of states like California taking even more aggressive lockdown measures. Analysts also were predicting an avalanche of weekly jobless claims to start as early as next week. This is Walker's Market Weekly. I'm RK Walker, and I'll see you again next week.